Hey there, my name's Curtis Lucas and you're watching Empire Building. A couple of housekeeping things to get out of the way before we get into the video. Just please be aware of the scammers down in the comments section. Just to make it clear, I'm never going to ask anyone to contact me on WhatsApp or Telegram or anything to that effect. If you see anything like that, ignore it. And as always, if you'd like 2 free stocks, the link for Weebles down in the comment section below. For Canadian viewers, I highly recommend Wealthsimple. It's the best and really only option we've got for commission-free trading. And for anyone who would like to join the community and support the channel on Patreon, the link is also down below in the description. So the question is, are Bitcoin mining stocks overvalued? This is something I understand a lot of people are a little bit confused about. I mean, they see the run that all of these stocks have had. They clearly must be overvalued. Anything that can go up that much, that fast, it has to fall back down, right? I mean, there's no possible way we could rationalize these prices, considering the fact these things were trading as penny stocks just a few months ago. I mean, yeah, of course, Bitcoin has gone up in price, but really, does it justify these companies being worth multiple billions of dollars? This is an important question. It's one that it's important that you have an answer to. Now, I've done videos like this in the past, but it's been a little while and a lot of stuff has changed. So I'm going to approach it again using some updated information. Now, what I'm going to show you in this video, I'm going to focus in on my single largest holding. Full disclosure, that's Marathon Digital. But the process of evaluating these companies is really the same for all of them. So you can repeat what I do for any company you want to have a look at. But I'm going to be hitting you with a lot of numbers and some math, so try not to freak out. It's really not that complicated, and we'll walk through it step by step. So for starters, Marathon Digital, and I'm always stopping myself from saying Marathon Patent. That's going to take a little while to get used to. Marathon Digital is closed the day off with a market capitalization of $4.748 billion. Which really, truly is remarkable considering we started the year off at approximately 692 million, and just last October was worth 87 million. So yeah, someone looking at this must be a bubble, obviously. But this isn't the same company we were looking at last October. A lot has changed since then, and obviously Bitcoin has run about 600% since October. But how do you evaluate this company? Do you simply add up all of its parts and obtain a value that way? Well, that's not actually how you value companies. But just for the sake of it, we're going to take a look at the components that make up this company's assets and its revenues and see what that might illustrate for us. Going to the company's presentation, they've outlined some interesting data points. And one in particular, we're going to have a look at their mining profit. And they have a few tables here, and at different expected prices of Bitcoin, 55,000, 60,000, and 65,000 US dollars per Bitcoin. They're evaluating their profit based on the total number of miners that they have on order once they're fully deployed, and calculating the amount of Bitcoin they would actually be able to mine and the base cost of that Bitcoin, as in their cost to produce, at approximately $4,500. So for every Bitcoin they mine, it costs them only $4,500 for a $60,000 Bitcoin, or $65,000 in this assumption. That's one hell of a profit margin. There's not too many companies out there that can produce products with that kind of margin. Maybe software companies where their marginal cost is extremely low. So right off the bat, these are very unique companies, ones unlike anything we've really seen before. But taking this total profit per month, and again, this is profit, this is not revenue, this is after expenses, $103.6 million in mining profit per month. Now, I know what some people might be thinking is that, okay, well, that's kind of ridiculous because by the time all these miners are installed, the difficulty on the network would have gone up. This is very true. However, so would have the price, assuming you believe that Bitcoin is in fact going higher. But if you don't believe Bitcoin's going any higher, then there's no way you're investing in any of these companies. So I'm going to assume you're a Bitcoin bull. I know I am. So at $103.6 million per month, that works out to $1,243,200,000 in annual profit. Now, again, I actually think this is a low estimate because while, yes, the difficulty rate will continue to increase, my belief is, and my entire investment thesis is that the price can rise a lot faster than the hash rate possibly can. And this has been true ever since the price started to rise. As I mentioned, Bitcoin is up 600% since October. But the difficulty rate ever since last October has actually only risen about 10%. It is not easy to push that number up. It requires massive capital expenditure, not just on the miners, but on the facilities themselves. These miners are scouring the globe trying to find the cheapest sources of power where they can set up these miners at scale. It's not an easy thing to do. It takes a considerable amount of time. But there's no restriction like that on the price. So if you're actually calculating future profits based on a future hash rate and today's difficulty, but also today's prices, this is a conservative way to estimate future profits. Because when you're calculating that in the future, when that capacity has actually been installed, yes, the difficulty would have risen, but the price of Bitcoin would have risen substantially more. Meaning your actual profit could be considerably higher. And I'm talking double, triple, even 4 or 5 times more. But I don't want to get everybody too excited. I'm simply pointing out that using today's difficulty rating with tomorrow's hash rate is not overestimating the significance of those profits. Moving on. We also have to account for the company's assets. So in this case, we'll be looking at how much Bitcoin do they have. We know that Marathon hasn't mined that much, and from their last year-end results, they also included the amount of Bitcoin that had been mined as of the March 15th, which had been just 254 Bitcoin, which would have been a embarrassingly low number compared to, say, companies like Hut 8 that have over 3,000 Bitcoin on their balance sheet that they have self-mined. But to make up for that, Mara made a timely purchase during one of the Bitcoin price dips and acquired nearly about 4,800 Bitcoin for $150 million. That was at a Bitcoin price of about $30,000, maybe $31,000, I think it was. So they're already nearly 100% in profit. Putting all that together, that means that Marathon now has 5,066 Bitcoin on its balance sheet. If we evaluate that at the same price of $65,000 per Bitcoin, we find that to have a total value of $329,322,900. So as you can see, so far we're off to a pretty good start, but what other assets do they have? Of course, there is all the miners. According to the presentation, they've got or will have 103,120 miners by the end of Q1 of 2022. How much are those miners worth? Now, at this point, there's how much they paid for them, but more importantly, how much are they actually worth now? If you go and try and actually purchase a Bitcoin miner, you're going to find it's running pretty hefty. On Amazon, this is an S19 Pro listed at $18,455. So even if we value these miners at about $15,000 a piece, that still brings their total value of that inventory up to $1.55 billion. And keep in mind that as Bitcoin's price increases, the value of those miners increase as well. But as we know, there's no way they're selling those things because they can make a whole lot more by simply letting them run. Now, they've also got a couple $100 million in cash and cash equivalents. So sure, you could add that into the mix as well. But bottom line is, just even adding up the sum of its parts, you're still getting to upwards of $3.5 billion. But that's if you were to cut this company up and sell it for scraps. That's not how we evaluate companies. But even, as you can see, its intrinsic value is pretty close to where we're at right now. But if you really want to know how much a company is worth, you have to look at that bottom line and then price in some level, some multiple. And what's generally used for that is known as a PE ratio. Every company has one, at least every company that has a profit. Now, up until now, even within this current report, Mars actually never posted a profit, even as of the end of 2020. So we're not going to be looking at its past performance, we're looking at its future performance. This is a forward PE. PE meaning price to earnings ratio. The PE ratio is simply calculated as the current share price divided by the earnings per share. So in order to calculate Mars' current forward PE ratio, we need to figure out, one, how many shares outstanding are there in this company? For that, I like to go to Y charts, and we can see that Mara currently has a total of 98.8 million shares outstanding. That's a whole lot more, and as you can see, there's been significant dilution. I know that this has actually been a point of contention for a lot of people. They don't like the fact that these mining companies are diluting their shares and it's diluting shareholder value. I actually beg to differ, because what the investors, what the shareholders are getting in return for that dilution is a much higher earnings per share. Had they not done that dilution, the actual earnings per share would have been far less, because they wouldn't have the miners. They needed the money, they needed to raise the money to buy the miners and build out their facilities. They can't get loans from the bank, so they go directly to the market. Yes, it's a painful process, but if you're able to muscle through it, you get to benefit from that increase in actual earnings per share. And it's substantial. So let's actually calculate what their earnings per share will be. To find the earnings per share, we simply divide the total profit by the total number of outstanding shares, which brings us to $12.58 per share. In case you were wondering, at the end of the fourth quarter in 2020, the actual total earnings per share was actually a loss of 10 cents per share. So we're talking about going from a net loss of 10 cents per share to a total gain of $12.58 per share. Now, obviously, this isn't exactly going to happen right in the next quarter. This is a forward PE, so we're looking a year out, which just so happens to be when the bulk of all of these miners are going to be installed. So now that we have that, we can calculate what the current forward PE is for Marathon Digital. Take the current share price and divide that by the future earnings per share, and we come to 3.8. Now, anyone that knows anything about PE ratios knows that is not an expensive company. Have a look at this. Here is, over time, the average PE ratio for the entire S&P 500. This is over the past 5 years. We've come down significantly since late, looks like this is the year 2000. But currently, this is sitting at about 21.35. It's very normal. Why are these ones so low? Well, that's a good question, but I think it has a lot to do with the fact that people don't, well, one, they haven't seen the profits ever, so they don't really know how to evaluate them. But also, assigning a large PE ratio usually is something you do for companies that have well-established moats around them. And even right now, people don't look at these companies as having any moat, because all it takes is money to buy more miners. Or does it? I mean, if you've got $20 billion today, how are you going to start a mining company? Well, the only thing you could do is buy another mining company, because you can't get the miners. And it'll be close to 2 years before you'll be able to do so, short of maybe buying up some older used machines. But that's what you get from those second tier miners that got into the game late. Me personally, I think there is a moat because it's going to be between 2 to 3 or even 4 years for any new players to even stand a chance at getting their hands on any of this equipment, especially since they're already competing against the already established players that already have partnerships with all of these suppliers. It's not an easy business to get into, especially not when you're trying to enter in with all the hype. So first mover advantage is the moat. But what is that moat worth? That's really the question we're facing here. I don't think it's worth 3.8. I can tell you that much. Is it worth 20? I think that might be fair. I mean, I'm not asking for a PE ratio or a forward PE ratio of Tesla. We can have a look at that. We're not looking for a forward PE ratio of 160. Many would argue Tesla doesn't deserve it, but let's face it, they've got a pretty good moat. For any competitors trying to catch Tesla, good luck. But this is why I'm not suggesting that these mining companies should have that kind of multiple. But a run-of-the-mill, everyday S&P 500 average of approximately 20 certainly seems responsible to me and very much justified. So what do we get as a price target when we apply a PE ratio, a forward PE ratio of 20 under these current conditions? Well, applying that average PE ratio of 21.35 and the earnings per share of $12.58, we get a target stock price of $268.53. Now, this is just my personal opinion, but I think that's what this company is valued at today, not 6 months from now. 6 months from now, Bitcoin's price could be $100, $200, even $300,000. What happens to this multiple then? And by the way, what happens when I can't justify the price anymore? What happens when we enter bubble territory? I mean, real bubble territory where no one can justify the price under any means. Are we going to witness that? Are you interested in being around for that? Can you handle that kind of volatility? Now, I have to stress, this is not investment advice. I am trying to provide some perspective, and you might think what I'm saying is absolutely nuts, but it is conceivable that we could see a 4-figure stock price in this company in particular, but let's face it, you can apply the same metrics across the board. A lot of these companies have been aggressively building out their fleets, and they're all in this arms race to try to get the most amount of hash rate as quickly as they possibly can. And they all have different means that they're pursuing that with. DMG is going full immersion technology. We have other ones that are sourcing it from geothermal, like Hive blockchain. As of right now, Riot gets its power exclusively from hydroelectric. MAR currently is certainly on the other side of things with their coal-fired plant down in Montana. But I would argue that when this really gets going, that's not going to matter as much. And what's really going to set things apart is how much Bitcoin have you got and how much are you mining every day. And me personally, on the off chance that we are going to enter into a absolutely ridiculous bubble that cannot be justified, I intend to be around for that. And the only way to be sure that I will participate in this insanity is to sit tight until I can no longer justify the prices that I'm seeing, until there's no metric that we can use that would make this make any sense. As of right now, this makes perfect sense. In fact, this still looks like a bargain to me. But that's also a decision you have to make for yourself. But the beauty of this is using this same math, you can derive exactly what you think these companies should be awarded as far as a PE ratio, and get your own target price. Maybe you do want to swing for the fences and give it a PE ratio just like Tesla. Going through this exercise again has given me an idea, and what I'm actually going to do is try to tabulate all of the Bitcoin mining companies and put all this information in one place in a spreadsheet and share this with Patreon members. So if you're interested in joining up, links down in the description. The community over there is growing quickly, and I cannot thank them enough. It means the world to me. But that's all I got for this one. Now let's get back to empire building.